Okay, here we go. So, good night, everybody. Today is March 9th, 2016. So, today's webinar, I'm going to be reviewing the 10 trades that I took today with my entries, my reasons, my stops, and profits or losses that I took today. First trade that I did today, this was pre-market that I took this Seadrill. I kind of pinned these little blue arrows where I took the trades today so that I could remember for the webinar. I had intentions of doing this as a review for the webinar since this morning. So I started off with this Seadrill here, pre-market. It was pulling down a little bit. Then it started making some higher lows. Had a nice little trend going on here. So I decided that I was going to play this trend. So as it pulled back to the 13, I took a 430 entry on this one, and then it just kind of quickly just pulled back into it. And then once I had a mental stop area of about 415 or so. Then as I looked, I saw this, you know what, there's a possibility that I could just bounce off this bottom or even make a head and shoulder off this pattern over here. So I figured, hey, let me just hold it. I was anticipating to pop it open anyways. That was why I took it 430 here on the long side. So I figured, hey, let me just get the pop. So I popped it open, and I actually sold some right here at this top in here, which is like 441, 440, somewhere around there. I can't remember exactly the numbers. Then I put a stop in, and it just came back right into it and stopped me out. So that was just a quick little in and out, shitty little trade. Made like 10 cents on it. So I took like it took like 10 or 11 cents on that one, so it was pretty ridiculous. I was expecting a much bigger push. I was actually looking for this yellow line up here. I was looking for a straight up push on this, like short cover and also some fresh buyers coming in to push it back up to about 480 or so, but that didn't happen. So that was my Seadrill trade this morning. And the next trade that I took was UVXY. As soon as the market opened, I saw SPY was doing pulling a little bit, so I took UVXY at 32 right here long, right here. As soon as he opened, I sold some quickly at 32.30. I sold some right here, and then it just kept going up, and I sold some at 33, and then I stopped out right under here because this bearish engulfing candle right here. This is 5 minutes. So I was pretty much on the 5 minutes all day. So once I saw this bearish engulfing over here, I got out of the position. So, well, I didn't get out. I tightened up the stops real quick. And I was expecting like this candle over here to serve as some support, but just right through here. And so I got stopped out somewhere in this area over here. I did this trade later on again, so that's why I have more blue lines there. But we'll talk about that when I get to that. VRX. So right at the open, chart was gapping up. So I saw this quick little whip here as a pullback, and I figured, hey, the chart looking kind of good, and I could blow it up so you could see exactly what I was seeing. The moving averages were over each other. This candle over here was printing a bullish engulfing here. So I figured I'm going to take this long, anticipating a break over all of this stuff over here. So what I saw, without drawing the trend though, I saw a quick trend over here, and I saw the fact that obviously just visually looking at it, I was like, okay, well, it's breaking through the trend. So I took a 66 long on VRX, and I put a stop at 65.50. I figured that'd be enough to, you know, encompass this this candle over here, but nope, it just right down, stopped me out right away. Got out of that trade for a 50-cent loss right at the open, only to see it, you know, do this for the rest of the day, which wasn't fun, and then obviously do that after hours, so that wasn't fun at all. But the initial entry was based off the bullish engulfing and based off the fact that the moving averages were over each other. So technically speaking, the flag was already broken. It was a bullish engulfing. There was volume coming in. Moving average were over each other. So technically speaking, it wasn't a bad setup to go long on. It just totally reversed on me, and that's why we have stops. So got out of that one with a 50-cent loss. And fourth one I took was Weight Watchers. I picked this one up off my scanner. There was a huge volume spike right here, huge volume spike. There was some kind of something circling about Oprah and some series or some crap like that. Anyways, so I saw the volume coming in, picked it straight up, but right off the scanner of 470, and I saw over 15, same candle too. So I sold straight over here on the 15, and I put a 1490 stop, and I got stopped out right around here. Did I wait for a pullback? No, I caught the news before anything happened. I caught it on this candle here. So, well, not the news, but I caught the volume coming up on the scanner, and I just picked it up off the scanner too. So I saw market makers coming on it, and there was a couple blocks, and I was like, you know what, whatever. And then as I was taking the trade, then I saw Wall Street posting up something. So we were kind of I was good on it, like I was mentally excited about it because I figured, hey, the news coming in, I already grabbed the position. The moving averages are over each other. The chart's over the 50 EMA. I said, you know what, this is gonna run, and I was actually looking for a much bigger move. So when it pushed over 15 on the same candle, I took up some. What's up, John? And so I sold some right into the 15 pop because this whole candle here was pretty strong. Volume was coming in, so I didn't want to lose the momentum on it. And then I put a stop in, and I just got quickly stopped back out in the money because my entry was 1470. I actually took a full size on this right away. There was no scale in or anything because I saw my market makers on it, and I saw the volume that was coming in, so there wasn't a scale in situation here. It was just all in. So that's why I just took the 15. I did like I think like 32 cents or something on the first piece, and then I got stopped out at 1490 on the other one, so I took 20 cents on that piece, and then it just kind of faded off for the rest of the day. I didn't even look at the chart after much, honestly. Didn't even look at it much after. Next one on the list that it was SHPG. I took a bunch of trades pretty early on in the day, by the way. Most of the times I do that. Sometimes I do it a little too much, honestly. Sometimes I end up with about 6 trades on my hand, sometimes at the same time. Gets a little confusing, but I have stops in, and if I'm taking a fish-in trade, like say I'm playing a setup or something, I'll usually be doing fish-in size anyways, so my my size isn't that much, and it's controlled with the stops. So it gets sometimes my box is filled with things. My box on the side there is filled with positions, and it's a little intimidating sometimes because you'll see like sometimes there'll be, I don't know, 75% of them will be red. If I have 6 trades on my hand, sometimes 4 of them will be red, and then they'll come into it. I mean, the best days are the ones where you see all like 5 or 6 of them are all green, but it's rarely a streak like that. So this one, SHPG. Okay, stock was gapping up, started to fade off early. I didn't even watch this, honestly. Didn't even watch this for a play or anything. Good thing I didn't, because it didn't pop or anything. It just kind of flushed right at open. But I did see market makers selling it here. They were selling it here. So I pulled it up on a side chart, as I usually do when I see market makers throwing up buys or sells a lot on a certain name. So I threw it up on the side chart, and then I realized that, hey, this is a double bottom right there. So I took a 58 entry. I literally nailed this one right at the bottom. What I don't know what that little bump right there was, if that's even on anybody else's charts, but it was on my chart. And so I had a line down here too. I took it off just for like during, I cleaned up some of my charts before I started this webinar because I had a lot of lines on them. So I had a line down here, and I had a line right there. And then once it came into this double bottom area, I said, you know what, I'm gonna play the obvious bounce, because this chart it didn't even try to make a name for itself or a stand for itself. So I figure I'm just gonna play the bounce. So I nailed it at 58 long. I sold some at, what did I sell at? I sold some at 158.55, so I made 55 cents on it. and I have the arrows where I sold it, but I don't have the exact numbers. I have the exact numbers written down on my notes. And then I sold the rest, same candle too, by the way. Well, next candle. Um, I sold the rest at 159 for 1 point. So it was actually 159.01 or something like that. And then I was done with that. I was purely playing a bounce trade on this, just based off the double bottom here. So once the chart gave up quickly, I wasn't looking for an area like a weak area, because look, the volume over here as it went up after hours yesterday was very low, right? So I expected that once this was starting to flush, I saw it on my charts, like into this candle here. So once I saw that it was flushing, and I just quickly glanced over and saw that there was no volume here on these buys that came in over here, I was like, this thing's just gonna flush right in. And so I quickly just put a line there, and I put a line there. I have no idea what that bump was. And then once it came into that zone, I didn't even wait for a candle or anything. I literally played that 158, boom. And I kind of like whole numbers, and it was at a whole number at the bottom right there, and just nailed 1 point on it pretty much on the on the full thing. I didn't scale in or scale out to that one. Well, I mean, I kind of did scale out. I took half at 158.55, and then I took the other half at 159.01. So I guess I did kind of scale out, but I didn't scale in. It was a one buy situation. This wasn't a trade. I never thought it was going to be a trade. I was literally playing a bounce. And I think in the room when I posted it too, I said 158 SHPG for a bounce play. And I'm starting to put those in more in the room. Like I'll say formation, breaking the flag type trade, or I'll say bounce, or I'll say double top or something, because I'm trying to get into your head what kind of position I'm taking into the trade right away. Like if I'm playing a bounce literally means that all I wanted to do is make a pin bar, which is this hammer right here. So all I wanted to do is make a pin bar and just reverse on it, nothing more. I'm not looking for a setup. Yeah, I'm trying to explain more with the trades as I take them. So like in the chat, so people have an idea of what size I'm taking. When I say bounce, I'm not playing scale in, scale out type deal. When I say bounce, it means I'm in, and if it flops, I'm out, and that's it. So I pretty much went in here with the size that I wanted, 500 shares, and so I took half at the half there, and then I took the rest up there. So it was a pretty interesting trade. I was done with it. I can't even remember looking at this chart for the rest of the day. I rarely look back at them unless there's a reason for it. Next on the trade was Tesla. So interesting chart all day long. I had to clean up some of the lines because I had a ton more lines on here. During the day, I put up this line over here, and it served for really good purpose all throughout the rest of the day. But here was my Tesla trade. So the chart was gapping up a little bit. It flushed it open, and it formed a bottom right here, right? So this bottom came from this point, and there's a, if you open up the chart a little bit more, you'll see that it was top over here, it was top in area over here. Let me open up a few days and you'll see. Okay, so you can see like the bigger picture where I was looking for that area to bounce. So I kind of caught that there at the bottom. Did not trade it at that point though. I didn't trade it at this point. What I was waiting for was a flag break here. I was waiting for a flag break here. So once the trade started to bounce over here, I saw these whippy candles down here. I knew that these were all like, hammers, bullish engulfing. So I saw these forming up because I had this chart on the side. And once it came over the 50 EMA, the volume was increasing over here. I played the anticipated flag breakout move. So I started this one at My exact entry was 204.77, right in this candle here, and I was basically using the 13 EMA as stop here. Chart did not slow down for a second. As soon as I got in, it was like boom, straight up, and I sold some at 205.75, quick 1 point there, and then it pulled back. Stops was still right in. I expected the pullback to the flag. You see that flag right there? See the flag right there? 1, 2, 3 points, right? You see where this candle came back and nailed it right on there? I expected that. So I already had this drawn up. And so once it pushed through without stopping, I expected the pullback. Now, when I'm playing a setup trade, I really love when the chart can just pull back into the setup right away and then strengthen right away for a further move up. And so once this pulled back here and strengthened up right there, I realized that okay, it's gonna move up a little bit more, and that's where I decided to keep into the position, and ended up selling here at 206 something. So it was basically almost a 2 point. I didn't even wait for the full 2 points. I mean, I easily could have gotten that, but I got 206.48 or 47 or something like that. So almost a 2 points on that one, on that little trade right there. But the setup was the flag. The setup was the gap up, the flush, the bottom, the flag, the volume coming in. MACD was curling up. Stochastics was curling up. The chart already had a 813 EMA crossover. It had a it was over the 50 EMA. There was a lot of reasons to get into the chart. So I got into it anticipating a break, and this is exactly what I got. I got the push, I got the retest, then I got the further move up. And obviously, hindsight, you know, I could have, could have played the whole day, right? But I didn't. And then I'll go back into it because that wasn't. I'm doing them in the way that I did the trade. So trade number 7, I did 10 exact. I did 11 trade, but the 10 that I'm showing you is the ones that I did in the order that I played them. Netflix. So daily chart on Netflix. Let me show you what I was looking at. Okay, this chart already broke. I did this last night, by the way. This chart already broke this trend, this uptrend here to the downside. The chart came back and tested the underside of the trend line. So I was bearish on this chart. I'm still bearish on this chart, by the way. So if it pops tomorrow again, I'm still looking for more of a short, because the chart's still under the 50 EMA, which is that green line right there. Still under the 50 EMA. Until it pushes through there, I'm not really too convinced. So like you see this line right there, even if it tries to and it does push up to that line all the way up to 100, I'll watch it there and consider that short. So I was bearish on this since last night. Put it on a side chart. I did some work on it last night already. So out of the gate, I was bearish on the chart. Missed the whole morning play. I was very busy with other stuff, so I missed the whole morning play. But when it came back up, I did not hesitate on nailing that top, anticipating a double top area. So actually that should be moved over to this one because it was on this candle that I took it. Once I saw the inverted hammer here up top, inverted hammer, pretty much almost gravestone doji right here, another nasty dragonfly doji right here. Once this candle opened underneath, so this little marker should be, well, I just tagged it in, but should be a little closer. So it was on this candle over here that I got short, 97.15 on the short side. My risk was only to this area here, because I wasn't going to risk high of day. I was going to risk to this shoulder area over here. So 97.15 on the short side, and chart instantly started to work for me. It got quickly rejected here. Remember what I keep talking to you guys about, quick rejections areas? So a chart that comes up here now, if this candle was a solid candle and this other candle was a rejection, but it was still a solid candle, like there was a lot of body on it, I wouldn't call it a quick rejection. This here is a quick rejection. Boom, it just tapped it, pulled right back. Tapped it, pulled right back. That's quick rejection right there. That's my first inclination for a nice strong downside move. So once I got into the short, the chart instantly started to work for me. It pulled right into the 50 on the second candle here, bumped off of it, and once it started to pull back into this candle, I covered some, and then it flushed straight through the candle. I expected shorts to cover around this area, and they did. They covered, and then the candle just pulled right in. So I put a stop at this. See the bottom of this candle here, right there. I put a stop there as I was working down, 96.31 or something. Then the chart came up here, popped up, stopped me out. So that's kind of what happened with this one. Perfect entry, like a perfect area and reasoning for getting into the trade, and quick short, covered here, stopped there, bounced back and stopped me out. So it was actually a really nice quick little trade. Chart ran after that, but I didn't care, and for some reason I wasn't caring enough to play the long side either. Either way, I don't care. CMG. So here's how I was looking at this since pre-market. I was thinking the chart was just gonna push up into open, and I was looking for a much bigger push up into open, and it did push up. This doesn't look like a lot, but it was 5 points right there from the area that I was looking at it originally over here from 510. So I could have made 5 points on the upside to the push, but I didn't play that. Again, I was very busy at the open doing other stuff. So this entire trade, I watched the entire room make like 20 something points on the 515 short from AJ's notes. 515 short. I watched the entire room make all this money here. But then I wised up and I saw a double bottom. So double bottom was right here. So what I did, as soon as it tagged the bottom and it popped, I got in. 497 long CMG. Stupid me. Tight stops on a stock like CMG. For some reason, I never have stops this tight on a stock this big. Don't know what happened. Don't know how I lost my focus on this one. Quick pull, stopped me out. Don't know why. I usually have wider stops on a trade like this. I anticipated the double bottom bounce here. Double bottom, perfect. Quick stop. Don't know why I only had $3 stop on this. I usually have on DWTI, on CMG, I usually have 5 points stop. And so, either way, I got stopped out right here within the next 10 minutes, only to see my 497 go all the way up to 518. So, I mean, what's 21 points, but and I didn't regret the move to the upside, and you see no blue lines on this because I didn't care to play it. When it was moving up here, I was calling for the room for 515, and it did get to the 515, and I just didn't care to play it after this stop out here, after it started to make a move up, and once it got into this area here at 505. Did anyone take that long from the double bottom? Yes, one guy actually messaged me and he said thank you so much for the CMG double bottom play. So I don't know where he sold, but I know he took it with me. And so I had to sit back and watch this entire move happen today without even playing it back a second time. Not that I was angry at the trade, I just didn't feel... I don't feel like buying higher sometimes when I have such a great trade, or when I had. So Oh, no, I just didn't feel like playing it afterwards, so I had to sit back and watch that amazing short that you guys did. Tracker, you guys did all that. And then I had to watch this sick reversal up to the upside. So 20 points down, 20 points up. I mean, that was your day right there. Hmm. It was just stupid on my part. I think it was just it was hindsight trading, right? Hindsight trading would say I should have stayed in the trade with the wider stop. Okay, forget hindsight trading. If your chart breaks the the bottom, this was the bare bottom here, okay? This was the lowest of the pull. If the chart breaks the bottom here, you should not be in the chart longer anyways, right? So, hindsight trading, forget all of that because that's not mine. It was never mine. So, my trade was here. My reason was here. So, did I get a bounce? Yeah. I mean, I did get a bounce. When I took it at 497, I think it went over 5. Yeah, it did. So that was at 3 points. That's not what I was playing for. I never play these kind of trades for 1 or 2 points. It's not my gimmick. So I did get a straight bounce off the candle. The boom, the bottom, the solid candle. I got everything that I wanted. The next candle opened on top. That was purely bullish. I mean, and then it just came down into it. So technically speaking, see what this line is from here go on, forget that ever happened, right? From this play here at the double bottom, where a double bottom here came back and pulled through the bottom, you should have a stop. That's where I had a stop. I usually have a wider stop, but I didn't. I had a 3-point stop basically, so I got stopped out there, and that was the end of that. So hindsight, yeah, but in the moment, once the chart breaks low of day, which was the bottom here, once the chart breaks the bounce and comes down lower, it could have come down a lot lower, right? So let's stick to this part of the trade here, and the fact that I played the double bottom was perfection. But the fact that it pulled through the low of day faked out tons of people, probably obviously more than me, and then kind of totally reversed on everybody. Well, these guys here, just like myself, got stopped out and had to watch this whole thing happen. But technically speaking, played the double bottom, it washed through that, and I got stopped out. So that was my CMG. So it wasn't a bad technical reason for getting into that trade. You can see a definite double bottom area. You can see here, when you're trying to play a double bottom, you want to play a bottom that has a strong reversal point where it bottomed the first time. See this huge wash, and then you see this huge reversal. So this is a strong candle right here, right? Strong solid reversal over here. So playing this double bottom here into a push was not a I went in full size on this one too, because I was playing a double bottom bounce just like I did on the SHPG. I went in full size on this one here. So because I was playing a bounce. So technically speaking, it was a perfect area for anybody to take a position based on the bottom. Hindsight, yeah, but can't hindsight trade. I would be like a million shares here and just let it go up, but hindsight. Okay, UVXY, I'm back to this one because I took it twice for the day. 32 is the lucky number for UVXY today. 32 is my entry here, sold at 33 basically, right? Once it washed back into that, it came right back down to the same entry that I had again. I said, I'm not doing this. I'm playing this again. Took the 32 again. Same candle. One buy, full size, 32, 70 something, sold that. Done. I wasn't looking for a full point on it. I wasn't thinking that it was going to go higher. I was full size right in. So it was basically a scalp, but it turned out to be one hell of a scalp. So I got like 76, 77 cents or something like that on one straight candle up here. So I took the money and ran. And I have no idea why I put this arrow here, but I remember just taking one buy, one sell on this one. So that was a pretty nice bounce. But that 32, and I wrote it in chat too. I said 32 is the number for UVXY today. And so what you can see is you can see that the bottom is the bottom, right? Forget the bottom. Look at the top. And that's why I had that trend line there. Every time the chart came up, it made a lower high, giving me the idea that it was going to wash right into close. And it didn't do it into close of the market. It did it after hours, but it did wash. So I was looking for SPY to make a push into close, but obviously it didn't happen into close like the way that I wanted it really to. See this entire move from here to here? I would have rather it happen in market hours, because it would have just been so much more, it would have been a lot more volume than after hours volume. So the sell-off would have been, it probably would have been twice as deep, because the volume here in real-time trading versus after hours would have been a lot more. So the chart probably would have come down to in the 30s or so, but in the low 30s. Didn't happen. But once I saw these lower highs coming in, and all day, guys, when you trade a chart, when you look at something, just quickly see the big picture before you start looking into the little sections of your trade. Before, if especially the guys with TOS, before you just highlight an area and blow it up, before you look at the immediate trade, look at a bigger picture of the trade, and you can see a complete range of the chart. Now, why did this chart stop here after hours? Obviously, there's area of support here from a previous day, right? So now that line here now becomes a play into tomorrow. This line over here, being that it was support for today, now just became resistance. So you're looking at 3155 area on UVXY to be in play tomorrow. So that's the number for tomorrow, 3155. So now you can totally erase this 32, because it'll hardly have any effect until that 3155 is broken. Now what's going to happen is, see that line there that played a very crucial part of this chart here. Now will become into here, which happens to be $31.98. So I'm putting back my $32. Guess it has something to do with tomorrow also. So the lines for tomorrow on UVXY are $32, $31.50, and the new one that I printed today at $30.91. So that's your range on UVXY tomorrow. So what you're going to be looking for, either the chart comes over this formation here and flags and pushes up to 33, or the chart gets rejected. So every time it comes up to this trend tomorrow, you nail that short and you stop over it. So every time, wherever it comes into it, you nail it short until, or if the market tanks or something, the chart goes through it, then you take it long on a support, because now that trend is going to be your enemy at the top or your friend at the bottom. So if it goes straight through, you play it on the long side. If it comes up to it and you see a quick rejection, any candle that goes like this, taps and it comes quickly back, taps and comes quickly back, any candle like that, short into it, risk the top of that trend. That trend is going to work for you. $32, $31.50, and this new number, we can just call it 31 just to make it even. So those numbers are already in my head now, and I'm going to be seeing this trend in my dreams, because I'm going to be all over this tomorrow. So that was trade number 9, and trade number 10 was TSLA, Tesla again. Told you guys I traded this twice. Put it back on the 5. This trade was done earlier in the morning. This trade is where I made a good bit of money on Tesla this afternoon. I was playing a simple flag break. That was it. Simple flag break here on Tesla. I took 206 long 206 long entry, came into here, came over this area here, I full sized it here, and then I sold right at 209 was my area that I wanted to get out, and I sold at 209. Chart hung around here for a little bit. When I sell, especially if I have a nice move or a decent size, I don't sell every single share, but I did sell quite a bit of it, and I had this trend up here obviously since this morning. Once the trend broke, I dumped the rest right here at 208.70 something. 209 line already on my chart. This line here, 209.74. I'll show you what 209.74 represents. On a 15-minute chart, you go out a few days and you'll see, it won't go out 10 days because it's not quite there. You see that line right there, that peak right up at the top? So that peak right at the top here, this is your magic number on this chart currently, okay? If that chart goes over 209.73, it's gonna push, right? So it didn't. And so once there was a reason why I sold at the 209. The 209 I've been talking about all day was gonna be my price target on Tesla. Actually, I sold all at 209.06 or something like that. When I say all, I mean 90% of it. I held just a little bit more for this possibility of it pushing through. And once it started to flatline here, I was thinking, okay, so it's consolidating. It's going to eventually push through. But it didn't. And once it broke the trend, I was like, yep, I'm done. I'll just dump the couple extra that I had. And so I'm actually short Tesla overnight 208.60. So the fact that today I didn't see that it wanted to push through, and if tomorrow it pops up to this line here, I'll add into the short position. So I have a fishing size at 208.60 overnight short on Tesla here. What I'm playing also is, this is going to get very, very confusing to you right now. Daily chart, because there's a lot of shit on here, right? Daily chart, double top, right there, okay? Bearish Harami star, okay? That's an important bearish candle pattern. So I'm playing that for exuberant push here with decreasing volume here. So you see the volume's decreasing here as the chart's still going up. Signals to me that I should be short. Stochastics are hot. That's the volume. That's the MAC. Okay, I can't open that. So that was the volume here. This is my MACD. It's hot, so it needs to get cooled off. And this is my stochastics, hot. Okay, so that's my area now where I'm interested in a short position rather than a long position. I won't initiate a long position into Tesla now until it goes over that yellow line over there, that 209.74 area. So if the chart gets up to here, I'm going to add into the short full, half size at that point, which stops over it somewhere, obviously in a controlled area. And I'm gonna expect a flush. See what happened here. I'll show you how many things I see at one time without talking about them or without having to bring it up again. You see this flag here? You see the candle that pushed through, never came back and touched it? Okay, you see how different it was here when the candle pushed through and came back and retested it? This chart have not retested this, okay? Ever since this move here today, after this candle broke through and pushed through and never came back to retest it, I said to myself, if this chart does not break this area here, I'm taking some short overnight. So in the back of my head, I already had, I'm going to be short in this chart overnight, because you see this trend here, this chart's going to come back to 207. So I'm expecting So I'm expecting a retest. Yes. So I'm expecting it, even if it pops to 209 up here, even if it nails that top over here, I'm expecting it to pull all the way back down here to 206. So that's my thing. See, the further away a retest is, the crazier the short gets. Because say this chart goes, I get stopped out, right? See that blue line right there? I'm not moving it because that blue line has an important factor to play into this chart right now. Support, 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 break support, right? That blue line now becomes your enemy. It becomes a rejection point. So even if I get stopped out over this, say I take more at 209.60 or something tomorrow, right? And I'm anticipating the rejection at 209.74, right? So say I take 209.60, I have a average of, I don't know, 209.20 or something, right? So then, if it breaks and I get stopped out, that's fine. I'll take that loss. But then I'll be eyeing this chart for any test of this line, and I don't care how high it goes. I'll be eyeing it for a rejection, and then the further away this angle gets from each other, the more insane my short position's gonna end up being, because that trend is going to be needed to be retested. So the further away it gets, the better my short position gets every time it goes further away. So I'll play this. I'm playing for the wash. If I don't get it, I get stopped out of my position over that high. Then I'll be playing this trend over here as a rejection for a bigger short position. Now, here's how to play this. Just in case you are playing it, and just in case you see something like this happen, you know now for a fact that, okay, if this line breaks, it becomes your support. Say the chart goes up here, say it pulls down here, say it goes up here, breaks through, head fakes, come back, finally finds a support, right? Okay, I get stopped out in between all of this junk, alright, fine. Chart's making a higher low, okay, pushing up. Once it gets up to here, once it touches that line anywhere, doesn't matter what point it is, once it touches that line, doesn't matter the price, doesn't matter whatever, I'll be taking the short. Now what happens is, as the chart comes down, I don't care how it comes down, straight or not straight or whatever. See, in this area right here, in a chart like this is where I'll be covering most of the position here, right? Say I entered the short position, this is where I'll be covering most of the position because I'm anticipating a bounce over here. Now, if the chart bounces off there, whatever, and then flushes through at this area here, right there, because what's going to happen is if it pulls through, it's going to retest that line to the underside. This is where I'll be adding back full position into the short, because now the almighty support area becomes its enemy, and I'll be adding full position back into here on the short side for a scalp short, not necessarily a trade, because now my average is going to be all the way down here, because remember I took off most of my position here. Say I had 500 shares, I covered 400 shares, I'm only having 100 shares. Say I want back 500 shares here, so I have to buy 400 over here. So now my 400 plus this 100 from over here, my average now probably is right about in this zone over here. So my stops now are tighter. So this now it is not a trade at this point now. It is merely I'm looking for a pull scalp short into full size. So there's a difference between a trade average and a scalp average on a resistance or support area versus scaling in, scaling out type deal. So I hope I didn't confuse you on that as far as how I would scale into this. If this is the way that the chart plays out, this is the way that I would trade it. If I'm doing I'm just giving you 500 as a reference. So hopefully I didn't confuse you on that. And if you want me to run that over with you again, just let me know. But that's how I would trade it, because this would be a trade, this would be a scalp. So there's a whole difference, even though this is from here to here is not a lot in range wise. From here to here over this line is a completely different trade. Completely different trade. This is a trade setup. This is a scalp setup. So your full size here, you're not looking for 2-3 points. You're looking for 50-60 cents. This over here, you're looking for 2-3 points. So hopefully that helps you analyze how and where you should scale in and scale out of certain positions, and where it goes from a trade setup to a scalp setup, even though it still looks like a trade setup. See, because a lot of people get into something like this here, right? They go add in here, and then they let it go here, over here, and then they let their average go red on them. Now they're like, how did I let a green trade take money and then go back red on me? Because you thought it was a trade setup and you started trading it like it's a trade setup. Like you're thinking, oh, I'll let it go here and I'll add here and I'll add here, and then it gets out of control. So this trade, this scalp. I need some water. So but while trading, guys, you gotta see these things happening. Like I'll show you in the same chart. Give me one sec. I'll show you on the same chart. I'll show you on the same chart. This setup here, a flag break, is a trade, right? Because the chart still has momentum. That's why I added full size over here, over the break of this peak over here. I was anticipating the push. I was showing you guys this today on Tesla. Okay. Look at the volume bars. See it up and down, up and down, up and down. Up and down, up and down means a lot to you. It's very, very important. Every tall green candle prints where it needs to print. This one over here prints here, right where the chart's supposed to curl, right? This one over here prints right where it needs to be, where the chart's supposed to curl. This one over here is exuberant, so you know that it's okay. When I say exuberant, it's bigger than the previous candles and it's exuberant. So that's where you want to short into exuberant candles. But we never shorted that. That was a pullback. And okay, I'll talk about that just now. Scalping. Interesting name for asking me a scalp situation trade. I'm longing, because remember my initial trade was long. So on this chart, and I tell you what, if I brought up the SPY chart next to it, you'll see that Tesla was doing the exact opposite of SPY all day long. And Michael, you have a scanner, and you know that the market makers were all over this one today. So they, no matter when SPY was going down, sideways, up, down, whatever SPY was doing today, Tesla was not caring about what SPY was doing today. It was doing its own thing, apart from every other chart on the market that I saw today. So my thesis on Tesla right off the bat was long, because the way that the money was coming into this, at every single point where the chart needed to make a move, see the big volume here, pushed it up. See the big volume come back here, push it up. See this big volume right here, pushed it up. Every single point where this chart needed to make a move, it made a move. Now this volume here, right there, did not push it up, and that's why I took my short position, because that volume here was supposed to launch that over. So once I saw that volume was coming in but the price was still flat, that means either there was a lot of sellers right here that were just hiding their shares or something, and that it couldn't push it up, because that volume bar right there is supposed to push it up. Right, the price action does not correlate with that volume. So every other area where it's supposed to correlate, it did. Every time the chart needed its volume, it got its volume. And when it came to a point here where it needed its volume, it got the volume. but the price didn't duplicate that. So that's why I took my short position there, and that's why I'm playing into for tomorrow. So we'll see how it works. But this chart today, this was a golden, beautiful traders chart right here. I mean, like, okay, so I'm done with all my charts for today. Let me see. I want to X all these things out because I want to show you inside of these charts. This is, I'm going to hate this. You know, I'm going to do them one by one. Sorry, because I just don't want to give up. If I delete it, it may delete other things I have on the other side charts, and because I haven't saved anything yet, and so I don't want to lose those. Okay. So, watching this chart from the morning, once you started to see a bullish area here, what you could have done was quickly put a trend line in here, right? This trade quickly becomes a channel trade because you could see it here. So it's a small channel trade. Picture you don't see all of this, okay? So right now what you're working with is you're working with the channel. So once the channel's broken, you can short it. And if you had shorted it here at 206.50, you would have come out with 205.50 and you would have gotten a point. Okay. So if you have your indicators up, actually you could have gotten that on the same candle, by the way. Yeah, could have gotten a full point on the same candle. So you probably would have gotten out because you would have seen the 50 EMA here. Now, I recently started using the 50 EMA more aggressively, and I dropped my VWAP because as I had the VWAP and the 50 EMA on the same charts, I realized that they were just bumping over each other constantly all day long. What I was getting on VWAP was, I'll show you, what I was getting on VWAP was I was actually getting a lot more, what the hell? Oh. I was actually getting a lot more chop on VWAP. Okay, here's what. You see the VWAP is the teal color on the chart, okay? Are you guys seeing that? Yeah? Is it on there? Okay. I couldn't see it. I have the little preview screen on. So the VWAP is the teal color and the green is the 50 EMA. Now I'm going to try to blow it up a little bit so you can see how they work and how close they are together, but how much different they are at the same time. Okay? Concentrate. I know it's a lot to look at, but you're going to have to. Concentrate on the green line and the blue line, right? You see how the green line just kind of gives me a smooth transition? Notice where the peaks, where the pin happens, it happens more so on the EMA than the VWAP. Now as you come up in this chart, if you wanted to ride this chart all the way up and you were using a moving average or VWAP as your stop or as your area where, hey, this chart needs to be solid. In this trade here, as the chart moves further away from VWAP, your stops would have to be too wide, so it wouldn't work. So okay, I'll get to that, Eddie. So using the VWAP here would totally mess you up on the trade as far as your stops, or even if you had stops here at VWAP, boom, stopped you out. EMA kept you in. Okay, this one, fine, it stopped you out both on VWAP and on the EMA, but at least it would have kept you in for that punch right there, for that move back up. So and I'll switch up a few charts. Maybe it'll show differently on some charts, maybe it won't. But I've switched from using the VWAP to using the 50 EMA because it's giving me a smoother transition throughout the day. You see, like, stuff like this happens where VWAP goes boom, 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 up and down, up and down. I've gotten away from that with using the 50 EMA. I've gotten a way smoother transition, and so it's keeping me away from a lot of the already busy stuff that I have on my charts. So I'm using the 50 EMA. So my standard now is 8 EMA, 13 EMA, and a 50 EMA. Volume on the bottom, MACD, stochastics fast. Okay, so that's my standard trading thing now, and that's pretty much how it's gonna be. Okay, so those were my 10 trades for the day, and I'm short Tesla overnight. Um, and wow, we're already in an hour. Okay. Wow, a lot of comments about that explanation. Thank you guys very much. Thank you very much. Okay, yeah, and you see how I have... Okay, I want you guys to... Damn it. To set up your charts if you have space. Mother effer. If you have space on your charts, and if you can do this, link your chart to a 15-minute chart on the side and link it to a daily chart on the bottom. Okay, you see, like on CMG, instantly I have a line plotted there on CMG already, where I know that the chart may want to come down to test that line eventually, right? So without having to switch over to a daily chart, which could just be a second, 2 seconds, whatever, but you try doing that during a heat of the moment parabolic move and see how much 2 seconds can cost you. So with having the charts linked, whatever chart that I choose, it automatically gives me a 15-minute and gives me a daily, so I can see in what location the chart is, what candles it's making. I can a quick analysis of double top, possible double bottom, so I can see quick analysis without having to go into and just change into the daily. And the cool thing is that I can see the chart working as my daily is going on at the same time, so that when I switch over, say I switch over to daily here, right? I don't know where that candle is anymore because it's on a daily candle, right? There's a lot of stuff going on my charts, please, I know. So you can't quickly see both of them side by side to see what the reaction is. Having this chart on the side, having the 15-minute and the daily on the side have really improved me visually seeing something a lot quicker. Remember when something's happening, like with the Weight Watchers, for example, right? Once that move happens, and this morning, I already knew before anything, that, thanks Colleen, I already knew that my 8 and my 13 on my side charts were crossed over, okay? I already knew that it was crossed over, and I already knew that my stop was at the 13 EMA before I even got into this trade. This is a bullish looking chart already, okay? Just based on the fact that the 13 and the 8 are crossed over. So by seeing the chart here and able to glimpse over here, I don't even look sometimes for the candles. I know it's very small. I look for those that red and white line right there. Why do you think in this chart it's all black? I don't have candles on this chart. All I'm looking for is the moving averages. That's it. Because I can play this chart with just moving averages. And you can use moving averages as a trend also. I can trend this moving average from here to here on the 13 to 13, and I can actually form a nice trend on this to play this entire chart. This chart obviously is in some sort of a channel by itself, so you can see that the moving averages are inside of each other there. Right there, just with moving averages, no candles, alright? And so I can already quickly assess that, okay, I have a cross up about to happen here now, right? I had a cross up on the 15. When I took the trade here at 1470, it was already over the 50, it was over the 13, and it was right about over the 8 EMA on a 15-minute chart, which is obviously a stronger guide for me than a 5-minute or 1-minute ever could be, especially if I want to make a trade. So by quickly seeing the charts in 3 aspects I can see where its location is on the daily chart. Is it high? Is it low? Is it at a double bottom? Is it at a double top? Is it at a trend? I can see tons of information just by having a side chart up. And this one here may not be so useful to you guys, but it is terribly useful to me, because a 15-minute cross up on the moving average strategy takes you into a very wide trade kind of perspective rather than a scalp perspective, because obviously as you decrease the time frames, I can trade all day with the 1 minute and with the strategy also, but I will not be a trader. I will be a pure scalper, because the crosses happen so much times in and out of each other. Now, even if you wanted to just scalp the hell out of charts every single day, throw the 1 minute on and use the 813 strategy and just buy every single cross. Either you go long or you go short. You're gonna make money off of it. Sometimes you're gonna make obviously a lot more. Sometimes you'll make a lot less. But if you played every single cross on a 1 minute chart, because I've back tested my own strategy, and they're about 92% correct that you're gonna make money. So you can do that all day long, but I'm not a scalper. So I trade. I look for setups, formations, and I still use the strategy, but I use it on a much wider time frame. 5 minutes for my entries and 15 minutes for my continuation. Daily charts if I want to hold it overnight. When you find a good trade, a bullish chart, a continuation candle chart, you want to be able to know, before you go dumping all of it, you want to be able to know quickly, should I be holding this overnight? Now when I did JDST, right, $6 entry, right, over here, $6 entry. When I did that, and after the chart happened, I knew before the end of the day, before close, while we were still talking live on mic, I knew that I was going to keep this trade. Why did I know I was going to keep it? Because I can quickly see on my daily chart that it was a bullish engulfing. Bullish engulfing at the bottom of a chart with a hammer right next to it. These are all bullish signals down here. So there's no reason for me to dump the remainder of that, even if I had some that wanted to carry over. There was no reason for me to get out of it, just because I had a daily chart there that gave me a quick reference to, hey, don't sell all of it, because this is going to happen. Did I think it was going to go to 8? No, I thought it was going to go to 9. But, you know, I took 8. So, I'm happy with that. But I'm still holding some in my swing account. This is my day trading thing. So my swing account, I'm still holding my full size long JDST. And I'm going to be holding that to 13. So we'll see what happens with that. But for my day trading account, from the 6 to the 8 was golden. And that it was just fun trade all around. But that was my 10 trades for the day. And so let me run over some of the questions that you guys put up. And thanks for the compliments on that Tesla breakdown. 5 minutes VWAP doesn't change, right? EMAs do. SPY was a chop fest, yes it was. And yeah, so we could compare. I'll bring over a side chart. Let me open this back. Nah, let's just not. Let's half split this. And let's bring over this chart. Open it up a little bit. Put SPY here. Now it's just gonna get a little choppy for now, but helps with the explanation. 5 minutes there, 5 minute there. Tesla here. Total bullish chart here. Straight up. Never looked back. SPY. Totally different. See the correlation there today? No correlation at all. Every time Tesla moved up, right at the opening here, Tesla moved up within the first 2-3 ticks. 2-3 ticks, SPY was still going down. Okay? At 10:15, when SPY made its reversal, at 10:15, Tesla was already 1 or 2 points in the money, so it needed that push. It got the push from the market. at 1040 when SPY pulled, 1040 right when Tesla pulled back. SPY dipped under low of day, Tesla held the 50 and kept moving since that, never looked back. SPY just flatlined for the whole day. So the chart completely different move today as compared to SPY, and this is usually one that's supposed to follow SPY. If you did something else, like some of the other stocks, this one totally did something different too. Netflix pushed up at the end. CMG we can't count because that was a whole different ball game today, so you can't really correlate that move to anything that the market itself does. But where was I going with this? The SPY and Tesla totally opposite moves today. Okay, back to full screen. Yeah, so totally opposite moves today, and it was totally great trade all around. All right, let me just jump back to here. So yeah. So anyways, I think I'm gonna stop the recording here for now, and then we can just continue talking. All right.